Four private broadcasters in Kenya are implementing a nationwide blackout to protest the mandatory move to digital transmission from analog, saying the process of issuing broadcast signal licenses was flawed and unfair. Tonight, we address the protracted battle between the national regulator and the stations. What lessons can Africa learn from the looming fiasco? Hello and thank you for joining us on Global Business. I am Penny Nakaribe, live in the Kenyan capital, Nairobi. It's 9 p.m. here in East Africa. Wherever you're joining us from, welcome to the show. Also coming up, with low foreign exchange earnings and heightened political tension, what lies ahead for Nigeria's economy? And low prices threatening to collapse Egypt's cotton industry as farmers opt for lucrative real estate offers. Despite a series of interventions by the Nigeria Central Bank, the country's currency, the naira, continues to weaken against the dollar. There are indications the Apex Bank may consider devaluing the naira further. The lender of last resort has burnt through some $1.1 billion over the past 9 days to prop up the currency that has fallen to lows of 200 to the US dollar. Deji Badmas reports.
These are certainly bad times for Africa's biggest economy. The naira has failed to halt its free fall against the US dollar, currently trading well above 200 naira per dollar at the interbank market and the official target band of 160 to 176 naira to the dollar. To check the seeming fall of the currency, the country's central bank is now planning to sell dollars at the interbank market at 198 naira to the dollar, well beyond its target band. But financial analyst Johnson Chukwu says the Apex Bank must begin to consider devaluing the naira further if it hopes to achieve stability in the forex market.
With low foreign exchange earnings, with heightened political tension which has constrained portfolio investors from coming to your market, and with our dependence on imported goods, it will be difficult for the central bank to sustain the defense of the naira. So I think the appropriate thing is to depreciate or devalue the currency to the parallel market rate, which actually mirrors the equilibrium price of dollar.
Central Bank has made it clear it does not plan another devaluation less than 5 months after it devalued the currency by 8%. It is now asking commercial lenders to submit their dollar demand levels and not to sell dollars purchased from the central bank among themselves on the interbank market in order to reduce speculation. But beyond the currency challenge, the economy also faces the risk of being downgraded. Global ratings agency S&P has already placed the country's credit ratings on watch for potential downgrade.
At the next review, if nothing significant happens, S&P is likely going to downgrade Nigeria's rating. What they're saying now is that, look, Nigeria still has the capacity to meet its obligation, but that has been weakened. And that it's very likely that if nothing changes, Nigeria's capacity to meet its foreign currency obligations may no longer be sustained.
The good news for the country, however, is that oil prices are beginning to pick up. Current prices of $61 per barrel may still be below its national budget oil benchmark of $65 per barrel. Authorities are hoping the current upward trend is sustained. But some analysts say despite oil prices gradually picking up, the government will resort to borrowing to finance its budget.
It is impossible for the federal government of Nigeria not to borrow to fund this budget. You just have to borrow. You must go out borrowing because you haven't got enough savings. That's the problem. And the production of manufacturing base of the economy is something very precarious, very low. In fact, it's not contributing much.
Yet another negative news for the economy is that inflation rate has now risen to 8.2% for the second consecutive month this year. The government has been forced to significantly slash its capital budget for 2015, factors that whoever comes to power after the elections in March would face a huge struggle to get things moving again, especially in the face of shrinking revenue. Deji Badmas, CCTV, Lagos, Nigeria.
Right. The Zimbabwe Stock Exchange has temporarily suspended hotel and retail group Michaels Limited from the booze for allegedly inflating a debt it was owed by the Reserve Bank of Zimbabwe. The bank's debt to Michaels accrued from 1998 when government used most of the money that was due to the group for processing national deeds. Farai Mwakutuya with the details.
The fallout emanates from a debt the Reserve Bank of Zimbabwe owes the retail and hospitality giant, accrued when the central bank dipped into private, individual and corporate foreign currency accounts at the height of an economic crisis between 2006 and 2008. Michaels Group stands accused of overstating the debt, which it has reported at $90 million, but which, according to findings of an ongoing parliamentary investigation into the central bank's debt, is only about $40 million. Michaels reported a $2.8 million loss for the half-year ended September 2014. It says the money it is owed has held up its compliance with the country's indigenization laws and slowed down expansion of its retail branch network. Michaels owns the country's second largest retail chain, TM Supermarkets, in which South African group Pick n Pay has a 49% stake. Farai Mwakutuya, CCTV, Harare, Zimbabwe.
Let's take a look at the markets now. And Egypt's market edge down 0.3% is still tumbled 4.1% after posting a third quarter net loss that widened to 285.38 million Egyptian pounds, or just about $37 million from 84.1 million pounds a year earlier. Still ahead, experts analyze South Africa's plan to turn to nuclear energy. And an in-depth look at the Battle of the Titans that is threatening Kenya's switch to digital broadcasting.
Africa is on the move. It's home to 7 of the world's 10 fastest growing economies. We help you make sense of the fast-changing African business landscape. We take you where the business is happening.
Global Business, weekdays at this time on CCTV Africa.
This report by the African Green Revolution Alliance says climate change will slash food output. Within the next 30 years, the number of malnourished people in sub-Saharan Africa could jump nearly 40%.
You're watching Global Business. Welcome back. Energy provision is the focus of the Africa Energy Indaba in Johannesburg, with the World Energy Council reminding delegates that 2015 is the year that the Council is focusing on Africa. Angela Kopler reports that one of the topics at the top of the agenda was nuclear power.
The country's nuclear procurement process has come under significant scrutiny since the President announced late last year that nuclear power was going to be an option to solve the country's energy woes. We're now entering the second phase of that procurement process.
For us, in terms of our plan, we need to have a strong baseload supply to the grid by 2023, 2024. Working backwards, you will find that certain decisions need to be made then this year and next year. So for this year, there will be announcements made through Cabinet in terms of the next steps and at what date those steps will be taken.
We believe that that decision will be made this year. And I would like it to be made tomorrow. It's as simple as that. But it ain't going to happen tomorrow. It's going to happen in a particular time frame between a month and 3 months. That's my sense. But of course, it's a guess. Nobody has told me this.
While the second stage of this procurement process is underway, the question is now being asked, is South Africa and its construction sector capable of building what's needed?
South Africa, from a construction and manufacturing perspective, has got time to gear itself up for it. But it needs a dedicated coordination between public and private enterprises to prepare this country for that level of construction.
While there's still time for the country to get its ducks in a row from a construction point of view, the environmentalists are starting to raise some concerns around disposal of spent product. But there's also the issue of cost.
Nuclear brings too little, too late, and at a very high cost, which Africans can't afford. Beyond that, no one has yet. Let us for 1 second agree that nuclear is an option. It's cleaner than coal, but that doesn't make it better, doesn't make it the best. The massive cost for nuclear is something African governments or African countries cannot afford.
Environmentalists argue that the price may be too high, and yet countries like Ghana and Nigeria are exploring nuclear as an option to solve their potential energy problems that they're having at the moment. Proponents will tell you that it's safe, that accidents rarely happen, and that it's a cash generator. The question is whether countries are ready to take the risk and pay the price. I'm Angelo Coppola for CCTV in Johannesburg.
Television viewers in Kenya can still not watch 4 private stations after the government switched off the country's analog signal on Saturday. The move was to comply with global digital migration. The private broadcasters proceeded to implement a nationwide blackout to protest the mandatory move to digital transmission from analog, saying the process of issuing broadcast signal licenses was flawed and unfair. The stations want to broadcast digital signals on their own platforms.
After years of wrangling, arguing, threats and numerous court cases, this is what greeted thousands of Kenyans on Saturday when they switched on their TVs. 4 of the country's private broadcasters went off-air after the government switched off the analog signal. This is in a bid to comply with the global migration to digital from analog signals by June. KTN, NTV, Citizen TV and QTV went blank on all platforms and resorted to switching off digital signals to the set-top boxes or pay TV decoders too. The broadcasters say the Communication Authority's order is unfair. They accuse it of flouting regulations in issuing digital broadcast signal distribution licenses. These licenses have been given to 2 companies, the state-owned Signet and the Pan-African Network Group. The government has hit back, saying it will take action against the broadcasters.
We are not going to be intimidated, and we will not be blackmailed. And they had better come to terms with this reality. We are not going back on digital migration. And they can stay off as long as they want. We are not going back on digital migration. They had better get that loud and clear. We are not going back.
Digital migration is expected to improve picture and audio quality, as well as create thousands of jobs. But the switchover will also cost governments and consumers millions of dollars. The Kenyan government has been carrying out awareness campaigns for 7 years when the Digital Television Committee was first set up. The broadcasters say while they are not against the switch, the process has been unfair. For consumers, especially those who spent money on buying a decoder, this latest development is just confusing.
Well, I think those stations should comply with what the government wants or what the court ruling said. Otherwise, there's no way you can keep on going to court and the judge has already told you what they want and the decision is on the table. Otherwise, it's obscene.
I cannot say that I understand what's happening with the government or what they are thinking. I don't know what they are planning, but on my side, I'm just miserable because we cannot watch anything to understand what's happening in the country in terms of the news and the program we used to watch.
I believed that since I have a digital set box or decoder, I would not have any effect when they shut the signal down for local channels. So I don't feel okay because are we going to pay for the decoder services or are we going to pay for local channels? What do we pay?
The 4 broadcasters have not given any indication as to how long they will stay off air. The government says they risk losing their licenses if the blackout continues. Maria Galang, CCTV, Nairobi, Kenya.
So let's discuss this further. With us here in studio is Francis Wangusi. He is the Director General of the Communications Authority of Kenya. Thank you very much for joining us. So the private media houses are asking for more time, up until May, if I'm not wrong. So why not wait until then? Because they're saying they need a bit more time to lay down their digital transmission infrastructure.
Really, there is no relationship between what they are demanding to do and what we have organized as a migration process in the country.
Yeah.
Digital migration is all about moving broadcasters who are on free-to-air or who are providing free-to-air services onto the new digital platform. And we have the two signal distributors that we have licensed as common carriers for all the free-to-air broadcasters. So for them to ask for more time, we really don't know from what perspective. The license we intend to give them, and we have not given them anyway, because they have not fulfilled the required conditions, including bringing us the necessary documentation from the registrar of companies to show that the company under which they want us to give them the license is duly registered with the government of Kenya. Is supposed to be a pay TV license. And we are not migrating pay TV. Anybody at any time within, any period within our broadcasting market structure will be able to come for any license, be it pay TV or a free-to-air broadcasting license or any other license that falls within the market structure and has no relationship with the digital migration.
Right.
So their request for us to give them more time is not tenable and it doesn't hold water.
So let's talk about the process of issuing these licenses, because they're saying it's flawed and unfair. When you listen to them, it looks as if, one is not being very fair to these private media houses. What exactly is this process? What is required of them?
Well, I think for once, we would once more want to put the record clear. The process of issuing the second signal distribution license was through international open tender. And the facts are there. They never won the tender. They were even unable to go through the first stage because they could not meet the basics. And this can be exemplified in what I've just said when we wanted to give them a pay TV license. By just requesting them to bring the basic documentation to be able to enable us process the license has been difficult, including the documents that I've talked about. The tax compliance certificate they have not brought, which is mandatory. There is a document we call CR12, which shows that this company is licensed under the company's laws in Kenya, and that the directors of these companies and even the place of operation of its business is known. So if you can fail to produce such a basic document, so honestly, and then you cry foul that you are being unfairly treated, then you see it doesn't. It just falls short of telling Kenyans that you are a liar and they should not be believing you.
It's widely expected in most countries anyways that governments tend to protect their citizens, that is local investors' interests. How far has the CAK gone in achieving that?
Absolutely. Of course, there are conditions even that are attached to giving licenses or platforms to do business in Kenya to international companies that are related to trying to protect also the local investment and also allowing the locals to be able to also grow up into this particular market sector. So, for example, the license we gave PANG, PANG is required to relinquish at least 20% of the shares to locals 3 years after the operations or after the issuance of the license. And of course, that is what they are grappling with right now, to get local investors to be able to buy into that company. So that is one way of helping the local investors to be able to grow in business. And secondly, it helps us also to transfer technologies that we never used to have, to be also domesticated in our own country, so that Kenyans can be able also to have their homegrown technology after having adopted technologies from various places. So the government has mechanisms in place to be able to help its citizens also grow in various businesses, and particularly in the ICT sector.
Right. In the East African community, Tanzania is the only one that has actually been able to migrate to digital transmission. There was, of course, wrangles between the media owners and the government. Media owners saying the process was rushed and all of that stuff. So what lessons can be learned watching Tanzania's case scenario?
Well, I think the process of digital migration, switching off analog transmission in various countries has been resisted. It is not just Tanzania alone. And by the way, just to put things in perspective, within East Africa, it's not only Tanzania that has moved. Rwanda also moved. By July last year, they had all switched off their analog stations. But of course, the resistance is just because of fearing the unknown.
Right.
And of course, even right now, among the Tanzanian broadcasters, we have even met some of them in forums, and they regret why they took that step. Because now they have seen the benefits that that is accruing in their businesses arising from the migration to digital broadcasting. Yes.
And finally, as we wrap up, there are fears that this digital transmission will not sustain commercial free-to-air channels. How viable are these fears?
Well, one of the things that entrepreneurs, especially in this field, can very well, look forward to seeing is a complete disruption of the market. In fact, right now, the free-to-air broadcasters who have been depending on adverts, adverts are now being, that market is being eaten into by various platforms, leave alone the one that we are migrating into. We have platforms like even social media like Facebook, they are eating into the same adverts. We have YouTube is eating into the same adverts. We are even now having IPTVs, which is now becoming a mature technology, and people are using to eat into these adverts. So the free-to-air market approach will eventually have to change, because it cannot be, and it will not eventually be sustained because of the number of other competing platforms that have come into the free-to-air market structure. So in my view, yes, you are right that eventually it may not be sustainable. But it is not because we are migrating from analog to digital broadcasting. It is just because the digital technology has disrupted and disorganized the framework of markets that have been in the old past. And now people need to have a new thinking, new look on how they can be able to do business in order to beat these traps that have been brought about by digital technologies.
Right.
Yes.
Mr. Francis Wangusi, it's a pleasure talking to you. Thank you very much
Thank
for coming to our studios. We had here in studio Francis Wangusi. He is the Director General of the Communications Authority of Kenya. Now, cocoa demand in 2015 is expected to slow as consumers scale back on spending following a dimming global economic outlook. Rabobank International says cocoa bean processing, a gauge of demand, fell in Asia, Europe and North America in the fourth quarter of last year. Slowing consumption comes after record buying helped propel 3 straight years of gains for cocoa futures. High ingredient costs prompted Hershey Company and Mondelez International, the maker of Oreo cookies, to raise prices. The rally encouraged more output, and now demand is easing just after farmers gathered a record crop in Cote d'Ivoire, the largest cocoa grower in the world. Resilient demand, however, in the United States might help make up for the declines. Well, let's take a look at commodity prices now. And oil slipped below $61 a barrel on Tuesday, dragged lower by weakness in some other commodity markets. Although threats to Middle East crude supplies and expectations lower prices may prompt a slowdown in U.S. output, limited the fall. Egypt's cotton fabric industry could be headed for rough times. Production has dwindled after government cut back on subsidies. As a result, many farmers have already been forced to abandon the crop for other lucrative businesses like real estate. Imports of cheaper materials from China has not made matters any easier. Leslie Mirungu has that story on Grassroots tonight.
Egypt's cotton fabric industry, once known for its high-quality products, could be heading for hard times as farmers dump the crop in favor of other profitable sectors such as real estate. The government's decision to remove subsidies and open the market for imports has only made matters worse. The country's cotton industry was one of the best in the continent, but now faces an acute shortage of raw materials and might be forced to shut down.
Yes, of course, my business has been hard hit by lack of cotton. Cotton factories were closed and now all raw materials are being imported. The material is very bad. Some years ago, the suit was made of very good material with reasonable price. But now it's very bad. A price of a suit is very expensive and the material is also bad.
The crisis traces back to the 90s when the Egyptian government decided to allow global markets to dictate the price of cotton. The 400,000 tons of cotton lint produced then has been reduced to a mere 127,000 tons by the end of 2014.
Farmers stopped cultivation and most of them are investing now in real estate. That is why dressing factories have been closed now. There are small workshops, but they would shut down if there is no cotton. Lazy farmers are the main reason of this cotton drop. They sell their farms to house developers. Real estate commissioners are paying millions of money to buy the farms to be built later on, so there is no cotton cultivation.
Experts advise that the government needs to enforce regulations to help salvage the cotton industry.
Cotton cultivated swathes are shrinking year after year. Farms are raised for architectural investment. About 150,000 acres of cotton have been raised during post-revolution era. Why is the government not protecting these cotton acres? Desert reclamation is also in vain and it costs billions of money. Clay soil is much fertilized than desert soil, so it needs protection.
It is possible that farmers will reconsider the cultivation of cotton, but there should be a government plan to support them. Cotton is very useful for refreshing soils. Soil that has never had cotton will remain very poor in quality because cotton's roots are very long and it deeply penetrates the soil, which renews the soil's layers. So if we stopped planting cotton, soils will be also damaged.
Faced with a gloomy future, the country's agriculture ministry has initiated a comprehensive restructuring of the industry and is also holding discussions with the private sector to upgrade factories and encourage farmers to return to cotton farming. Leslie Mirungu, CCTV.
Well, let's go through the currencies now. When South Africa's rand firmed to its strongest level in 7 days on Tuesday as the dollar slipped and hopes of a compromise preventing Greece's exit from the Eurozone were dashed. By 1400 GMT, the rand had gained 0.52% to 1160 per dollar. The local unit gaining momentum after sluggish trade in the wake of lowered liquidity after a US holiday on Monday. And that's it on Global Business tonight. Do send your feedback to globalbusinessafrica@cctv.com. You can visit us on Facebook. Our page is CCTV Africa. Also stay in touch with Global Business on Twitter using the handle @CCTV News Africa. I am Penina Karibe. Thanks for your company.